Good morning, all. Welcome to the weekly Saturday knowledge sharing webinar organized by Meta and Meta. Friends, today's topic is an insight into InvIT regulation. InvIT, friends, last week we had done a read, which is regarding real estate property investment trust, and this is infrastructure investment trust. So we are covering in last time we have covered insight into the what it have scope in India for future, who can invest, what is the investment, what are the regulations, what is the role of employee CS, compliance head, and practicing CS in rate. Same way, friends, now we will do the similar insight into InvIT, and also we will have understanding about the future of InvIT in India. For that, today we have our panelist, Ms. Richa Gupta, Company Secretary and Compliance Officer, Cube Highways. Welcome, Richa.
Thank you.
CS Richa Gupta Rohtagi, I hope I properly pronounced, sorry, Rohtagi,
Yes.
is currently working as a Company Secretary and Compliance Officer of Cube Highways. She is a law and commerce graduate and member of the Institute of Company Secretaries of India. Highly experienced and seasoned company secretary with over 15 years of expertise in corporate restructuring, corporate governance, and compliance management. Proven track record of spearheading complex corporate transactions, ensuring seamless compliance with regulatory requirements, and driving business growth. Previously associated with renowned organizations such as Bharti Airtel Limited, Bharti Hexacom Limited, Eldeco Infrastructure and Properties Limited, Religare Pacific Group, and SRL Limited, where she successfully led compliance functions and ensured adherence to corporate governance norms. Welcome, Ms. Richa. Thanks for your time.
Thank you.
To present today's presenter is Ms. Kinjal Mehta. Ms. Kinjal Mehta is a chartered accountant and a company secretary. She previously gained experience in E&Y assurance, auditing prominent private sector banks, and contributed to merger and amalgamations transactions within EY's strategy and transaction advisory team. She also worked with Black Soil Capital, a debt fund, underwriting investments in growth companies. Currently, she serves as a senior associate with Mehta and Mehta's IPO team. We have our panelist, as usual, Mr. Sudhakar Sarvatula, Chief Consultant Mehta and Mehta. He don't need any introduction. And our moderator, Mr. Bala, who also don't need any introduction. With this, we thank all our panelists for today's webinar for joining us in our knowledge sharing journey on behalf of entire team of Mehta and Mehta. With this, I'll request Ms. Richa to say a few words on the topic, then Sudhakar and Mr. Bala, and then Kinjal, you can start the presentation. Thank you. Over to Richa.
Thank you. Thank you and very good morning to all of you. And special thanks to MM team to curate such a naive and nascent topics every time that keep all the professional fraternity abreast with the recent trends and requirements that is much required for everybody. And special congratulations for you to pick up this reads and invits knowledge session and awareness session, which is much needed at this point of time. As you know that you have already covered REITs last week, let me just focus on InvITs basically. InvITs Infrastructure Investment Trust, which was introduced in India in 2014 by SEBI. SEBI introduced its framework under InvIT Regulations 2014, which was notified in September 26, 2014, that provided a framework for establishment, operation, structuring, etc. And then after that, in 2017, the first InvIT was registered in India, which was IRB. We all are very well aware that India is the most fastest growing economies in the world, driven by the infrastructure development, urbanization. And with the growing population and increasing urbanization, the need for the quality infrastructure is on high rise. Even Indian government has been emphasizing on this and promoting infrastructure development through its initiative like Make in India, Viksit Bharat, smart cities mission, which is expected to boost the economic growth and create new opportunities for investors. So recently, yesterday only, we had a national conclave of which was organized by the Association of InvITs, Bharat InvIT Association, along with REITs Association, that is IRA, Indian REIT Association. Collectively, this was the first debut conclave where eminent speakers and guests were there. And I'll like to tell you that Mr. Amitabh Kant, which needs no introduction, the former G20 Sherpa and former CEO of Niti Aayog. So he addressed that with the AUM of almost 7 lakh crores, which InvITs are serving, with the only 27 InvITs are serving. This is very minuscule when it is viewed against the country's infrastructure needs. So he said our target should be $1 trillion. That's about 90 lakhs crore, which is 13 to 15 times where we stand today. So this is the growth trajectory that we see in next years for InvIT and REIT in India. So there is a lot more to explore, and I'm sure Kinjal is just an expert on that. Now I hand it over to Kinjal to take it further.
Yeah, and I think now PF, they are giving hint that PF and other IRDA and all that fund also they are attracting to invest
So
in
SEBI is in
REIT.
continuous awareness session and in encouraging municipal bond funds, PFs, and you already know that Canada Pension Fund is also already
Right.
investing in India. So all these untapped sectors needs to come and be aware of the opportunities that REITs and InvITs are offering in India.
Yeah. In other country, REIT InvIT is very settled. Singapore, US, Japan, France, everything. So, friends, this is the topic where lot of growth is expected, and that's why Meta and Meta has picked up. It's introductory. More REIT InvIT is there. We will take again the session and series for REIT InvIT and its compliances. This is the introductory starting point. And thanks, Richa, for your contribution and sharing the experience. Thank you.
Thank you.
Yeah, thank
Over,
you.
over,
Sudhakar, please.
over to Sudhakar. Yeah.
Thank you. Good morning, everyone. And as Deepti has rightly mentioned, and of course, Richa has further added to that, in the growth trajectory of any country, infrastructure development is imperative. And infrastructure development, as we know, that it requires, if not lakhs of crores, it certainly requires thousands of crores. So primarily, it used to be the government used to take the responsibility for the development of infrastructure for any country, especially for the underdeveloped country or developing countries. Infrastructure development is very crucial and critical also. Apart from the government, it is the private sector too has to take interest and to develop these kind of infrastructure projects. So that small players may not be able to play. And question comes, how about small investors? How to make the investment? Because the InvITs offer a stable income without much volatility or aggressiveness as far as the profits are concerned, or income is concerned, or returns are concerned. So the people who look for stability, the people who look for a steady flow of income, they have to make the investment in the InvITs. But this InvIT still, according to me, it is in the infancy stage only as far as India is concerned. It has not reached the adolescence age even. So might be this is a niche area for the professionals to understand the nuances and intricacies of this particular area. And that is the reason, as Deepti has rightly mentioned, and okay, we have taken up this as the webinar subject for this particular week. Unfortunately, whenever we experiment with this kind of what's called the topics which are different from Companies Act or SEBI listing regulations and all, the participation is not very encouraging. Sometimes we think that should we flow with the waves or should we go against the tide? But we thought that if you see very few professional institutes like ICSI, ICAI, they organize very few programs on these kind of topics. And whenever you ask them, the answer to that is that participation nahi hota hai. So we thought that in case of webinars, whether participants are there or not there, that doesn't matter much. The quality audience are very important. We want to serve to the quality of the audience. Because if everybody talks about Companies Act, everybody talk about SEBI listing regulations, who will talk about these kind of subjects? So that's why we will continue to do that. We will continue to identify these kind of niche areas, and it is up to the participants how much benefit they want to take about this thing. So as far as the other things about this are concerned, when Kinjal is making a presentation, wherever we have to step in, and we will do that, and we can discuss and deliberate it further. I give a pause and hand it over back to Deepti. Thank you.
Yeah, Sudhakar, fine, you rightly mentioned whatever is the participation, but we will always like to establish that CS are not only company secretary for Companies Act LODR, but they are compliance head and corporate governance professional. And that is the, I will say, the mantra of Mehta and Mehta, that we are compliance and governance professional. So all the compliance as friends, we have taken NBFC compliance series, now REIT Invite, and we are going to have the same way PMS, AIF, research analyst, various other thing, because even though there will be 50 or 80 participants, we will have it. With this, I'll hand over to Mr. Bala for to say a few words, and we'll start the presentation. Thank you.
Good morning to all of you. I have a great pleasure in welcoming you all on the first instance. As Dipti and Sudhakar has put it, water keeps on flowing in the river. It is up to the individual how much water he wants to actually take in. Whether he wants to take a handful of water, bucket of water, 2 buckets of water, or storing capacity of water, it is up to the participant to pick it up, whatever the things are there. Like that, knowledge will keep flowing from Mehta and Mehta. How much they want to pick it up, it is up to the individual. I will leave it there. That is number one. Number two, we are very lucky to have Richard today, who's actually coming from Cube Highways Trust, which is one of the very, I think there is not list happening like, digital fiber infrastructure, energy infrastructure, sustainable energy infrastructure trust, etc. and other things and all, which are actually there. And maybe some of you would be also who are in the market would be actually dealing with some of the infrastructure which are already listed, because there are very few, I think 4 or 5 infrastructure trusts are actually limited. One is, I think, the power grid. There is also another IRB. And one more is also the national highway. I think if I'm not mistaken, that was some Bharat or something like that. That's what I think so. So they are also already listed. As Dipti puts it, there are not many things for the people who are in the practice to pick it up, because there are various certification, various compliances, etc. and other things are all involved. It is one of the area for the practice, which is actually another avenue which is available to all of us. So it is better that we get to know the topic, we know the thing. Last time we did the REIT, there was a specific question was there, why there are 2 regulations between REIT and InvIT, why not one regulation? Globally, it is like that. All those questions were there actually. Since we have the expert here who's also associated with the SEBI and recently attended the conclave, probably we may get, what we want to know on this webinar. I think so that will help to the greater thing. It is an ongoing learning. So let us continue to learn who are providing the knowledge. That's all. I give a pause here. I'll ask Kinjal to take the presentation forward. Over to Kinjal.
Thank you. Yes, yes. Good morning, everyone. I'll just share my screen. So, good morning. As we know, today's topic is on InvITs. And this industry itself is relatively, this product itself is relatively new to the Indian market. So, there is little information out there in terms of the compliances, how it works, the concept of it all. So I will just start with the background on InvITs. So as we know, the India's growth is just exponential year on year, and the infrastructure need to keep up with the pace of India's growth trajectory is very important, as mentioned earlier. And so, undertaking massive infrastructure projects requires significant funding. Now, because of InvITs, this kind of opens up doors for various different kinds of different types of investors that would bring in money, which before would be limited to infrastructure companies. that would lock in, their entire capital working on certain projects. They are also mutual funds for infrastructure projects, in a sense that InvITs pools money from investors in the form of units that may or may not be listed on stock exchange to invest in income generating infrastructure projects. These Then it distributes the fixed income that is earned from these infrastructure projects to its investors. It's professionally managed by an investment manager and a project manager. Then today, India now has a mix of public and private InvITs across sectors. These sectors that take advantage of this instrument that is available are roads, renewable energy, power transmission, telecom, fiber and towers, gas pipelines, logistics and warehousing, etc. Now, InvITs has had a slow adoption in India. It was first introduced in 2014, and from 2014 to 2017, it kind of struggled to make an impact. But 2017, there was, first two InvITs launched in India, IRB InvIT and IndiGrid. And this was more due to taxation uncertainties, investor hesitation, and all. And since then, InvIT has only been growing in India. There were a lot of multiple, regulatory relaxations. There was tax clarity that came in. There was stronger asset pipelines that kind of improved the performance of InvITs in India. Now, why did India need InvITs? So as you know, infrastructure developers like road developers, transmission companies, energy companies often have money locked in projects. InvITs allows them to kind of unlock this capital by transferring these projects to a trust and receiving funds from investors for these kind of projects. It also allows investors to participate in stable long-term infrastructure cash flows. So essentially, InvITs gives investors access to assets that traditionally weren't accessible to other investors apart from infrastructure companies. Toll roads, power transmission lines, gas pipelines, renewable energies, telecom fiber, and all these kind of assets were not available to investors earlier, which InvIT allows for them to invest in these kind of projects and assets now. It also created a new investment vehicle in Indian capital market. So InvIT was designed to channel long-term capital from institutions, pension funds, sovereign funds, and eventually retail investors. Their structure ensures mandatory distribution of income 90%, tax efficient pass through mechanisms, and professional management and governance. So, the Indian InvIT industry today, India has 27 registered InvITs with an AUM around 6 to 7 lakh crores, of which 6 to 7 are listed, and with the listed AUM of around 2.4 lakh crores. And I've just listed down the top InvITs today basis their market cap. These include Cube Highways, India Grid, IRB InvIT Fund, Power Grid Infrastructure, Enterprise Trust, TVS Infrastructure, and other smaller InvITs.
Absolutely right, Kinjal. So India has 27 registered InvITs, out of which all are listed, but few are privately listed, like 6 or 7 are publicly listed, and rest all are privately listed.
So we have top InvIT compliance head with us as a panelist. Thanks for that. And congratulations to you as well for that.
Just to add to one point to what Richa has said is about 7 are publicly listed and the remaining are privately listed. So participants may confuse what is this private listing. The private listing is not that kind of invest there. In case of private listed investments, public may not be able to invest it. It is primarily for the institutional investors and that kind of a this thing. that a retail investor may not be able to invest, whereas the public listed InvITs, where the retailers will also be able to invest in that thing. If I'm not wrong, that is the primary difference, Richa.
Right. And in the privately listed in which the retail base is little lesser,
Yeah,
public listed entity has a larger retail base.
correct. And
The
unit value also differs.
unit value also there was the private the privately listed threshold for the investment is also different. It's the
Correct.
token the threshold is 25 lakhs per unit price per slot wise. And also the governance wise, there is no change. Broadly, all the compliances on privately listed or publicly listed InvITs are more or less the same. The governance, the regulations, the regulators' eyes are regulate basically same. It is that since in the infrastructure sector there's a huge amount of underlying asset, huge amount of capital is being required. So sponsors takes that comes into the picture and takes that responsibility to set up the IM as a professional setup, makes the policies, hiring the people, etc. So that risk is not passed on the retail investors at the initial stage. Once it is matured, once it is mature enough at the life of the asset, then it goes for the conversion from private listed to public listed. Vis-a-vis on the public listed, which has a matured asset or a pipeline where the sponsor, the promoter sees as the that we can go ahead for the public launching, then it comes as a public listed InvIT. This year we have seen two public listed InvITs coming in.
Also, to further add to what Richa has said, is especially the participants who are the young professionals. Always there is a confusion between what exactly is InvIT and rate, and okay, that one can to understand it further, you can take base as the mutual funds. If you can understand what is mutual funds, how the mutual fund investments takes place, regulations and operations might be different, but to have a basic understanding, it is nothing other than mutual funds. And that if you have the mutual fund concept clear, it is very easy to understand what is InvIT and what is InvIT units and how it operates and all. We will, I'm sure that Kinjal will be further explaining us to us that what is the operational modalities of InvITs.
So this is a typical structure of an InvIT. We will deep dive further into this, but essentially you have a sponsor that sets up the InvIT, transfers the initial assets. He essentially initiates the process for the entire structure of InvIT. You have investors and unit holders that pool in money and invest money into the InvIT. Then you have trustee that kind of takes care of the interest of these unit holders. And you have an investment manager that manages the structure of the InvIT and investments of the InvIT. And you have project manager that kind of looks into each individual assets of the InvIT. And these assets are more often than not managed through SPV mechanism. And these assets usually they give out fixed regular income, which is collected and that is distributed to the investors and unit holders. While the other participants in the structure, that is the trustee, project manager, investment manager, they take a fee. So we'll just briefly touch upon setting up of an InvIT. So InvIT must be set up under Indian Trust Act as a trust. There must be a trust deed which will have the investment objectives, roles and responsibilities of parties, right of unit holders. You need to appoint key parties, which will be sponsors, trustees, investment managers, project manager. They all must be separate entities. The trust deed must be registered under the Registration Act, and they should be compliant with SEBI regulations, and it must be signed by sponsor and trustee. To after the registration of trust, one must go for registration with SEBI. It is this registration is done by the sponsor in on behalf of the trust in Form A, and with an application of a fee of 1 lakh, and certain required documents that must be provided. SEBI will review these documents and seek clarifications if required, and Once that is approved, you'll have to pay a registration fee of 10 lakh, and a registration certificate will be issued. In case it's not issued, an opportunity of being heard will be provided.
Kinjal, can you please go back to the previous slide? Previous to this slide. Previous to this slide.
Earlier on, he is coming.
Yeah.
Earlier on.
So Richa, I
Yeah.
see this understanding the key parties to be appointed, that sponsor, trustee, investment manager, project manager.
Right.
Understanding the role and responsibilities of these people is very important.
Right.
So can you please explain what exactly a sponsor has to do? And after that sponsor, what he has to do, then the trustee enters into. Then trustees appoint the investment manager. What is the responsibility of the investment manager? Then the project manager comes into picture.
I
Okay.
think that is being discussed in the future slide.
Yeah, it is covered in.
She's covering it, but it is coming in the later portion.
But see that what happens is, before you understand that values and other things, okay, that Kinjal, either you go to that particular place, because according to me, to understand what is the forms and what is the unit values and all, according to this, understanding these four elements is very important. That you can talk about that right now itself. It is better. Then you go to that other slide.
Yes, that's
I'm sorry. In
just
fact, I
the
was traveling,
next.
so I couldn't see the presentation. That's why might be I am just jumping around.
That's exactly the next thing that we're taking up.
Okay, please go ahead.
Yeah, so once establish the structure, you have the SPVs that are put in place. You either invest in assets, infrastructure assets directly or through an SPV. Usually it's done through an SPV. You appoint investment manager, project manager, you ensure valuation compliances there in place, in publicly listed, privately listed listing of units, then the transfer of assets of from the sponsor to InvITs, and any post-regulatory compliance that happens. You also appoint other key intermediaries, that is the value auditor, registrar and transfer agent, and merchant banker lead manager for listing. Now we deep dive into the role of each and every participant in the entire structure of InvIT. Starting with the investor unit holder. So, investor and unit holder is essentially the capital provider for the InvIT, and he essentially invests money, and in return he receives units that represents proportional ownership. This investment is used to then acquire assets, make further investments, ensure growth, refinancing, etc. And yeah, they also receive income, and they are beneficial recipient of income. So all the 90%, minimum 90% of all the cash flows, net distributable cash flows that are collected from the infrastructure assets are distributed to the unit holders. And this income must be paid once every 6 months. Um, they are also market participants for this particular instrument, and they provide liquidity in the market for this particular product, which is lacking as of right now. They also indirectly own the infrastructure assets. They have fractional share in the asset, and the value of the units reflect the underlying asset value and its income generating capacity essentially. They are also, at the end of the day, the risk bearer, the market related risk and operational risk that comes about from investing in the infrastructure project. Now, there are these unit holders are all similar in terms of the rights that they have. They don't, all the units have same rights, no superior rights are provided. However, the sponsors and their associates can have subordinate units. This is put in place just to ensure that the minimum holding requirement for the sponsors is maintained.
So, Kinjal,
They also have,
yeah.
yeah.
So, Kinjal, you are absolutely right on the unit holders' right and subordinate units. In 2024, SEBI has come out with their amendment in the regulations and introduced this concept of subordinate units. I'll be happy to share on a practical front. In 2023, when Cube Highways was getting listed, it innovated this idea of a subordinate unit in one of the formation transaction, that instead of a cash swap for the assets coming down from the sponsor, it has introduced for the subordinate units. So subordinate units has a concept that instead of a immediate consideration of the asset that's been fallen into the trust in an SPV, so a certain number of subordinate units are being granted at the first stage, which has a different ISIN, which is in a different account of the sponsor. And then next year or the next coming years, when a threshold of any collection revenue or of any SPV or the underlying asset is being achieved, then those subordinate units are being reclassified as ordinary units. And then the sponsor gets that ordinary unit holding at that time, at the determined formula of a price, which is already defined in the placement memorandums, which is already in public. So Q was the first one to introduce that, and no InvIT in India has used this instrument of a subordinate unit. Post this introduction by this units, SEBI has now formalized into the regulations, and also SEBI carved out that the subordinate units issued prior to these regulations will be governed will not be affected by these regulations. However, going onwards, they need to maintain this while reclassifying. So that's a very classic case that InvITs provide for sponsors to use the subordinate units concept.
Great to know, Richa. It is a very good innovation which is actually coming. Yeah.
Richa, just for understanding, what is the benefit of subordinate units instead of passing on property earlier?
So the performance of the asset has to be achieved by the time we are giving that consideration, upfront consideration to the sponsor. And sponsor units are only given to the sponsors associates only. So instead of we take time for that underlying asset to mature enough and to start generating its own revenue by the time the consideration is given to the sponsor.
So it's a kind of gestation period to complete, or you can say, or
It's
self-sustaining property,
it's
generating income.
Yes, you can say so. And also the price is also predetermined,
Okay.
considering certain formulas, certain permutation combination, understanding what could be the price at that time. There's a protection for investors also.
Right. Got it. Thanks for understanding. Thank you. Yeah, Kenya.
Yeah, so unit holders also have right to receive income and net distributable cash flows. So minimum 90% of all the net distributable cash flows that are collected from the assets in the form of say toll, etc., which is on a regular basis. They are collected and paid at least once every 6 months to these unit holders. They are also required to conduct annual meetings at least once a year within 21 days from the end of the financial year. And then the time between two meetings should not be more than 15.
And then as an
Now,
additional step for which has been welcomed by SEBI for the investor protection, is that they are mandated to provide the VC facility to the unit holders, so that there's a wide participation from the investors and they have the right to participate.
See, again, my question is still not answered. I said that for the benefit of the participants, you have to explain how the InvITs are getting established. What is the duty of the sponsor? And similarly, whether that InvIT trust, who build the asset, who transfer the asset. You are talking about transferring the asset, acquiring the asset, and all those things. But from where? So you people have to explain that for the benefit of the participants, who build the asset and who transfer the InvIT acquires the asset from who,
Can I touch
why they
upon this,
acquire
Angel,
the
if you allow
one
me?
minute, one minute.
Yeah.
I'm just provoking you people to so that you will discuss about that, right? So you have to say that who built the asset, and who give that asset to the InvIT, why the transfer takes place. When the transfer takes place, InvIT from where it get the funds to make the payment to the whoever has built that asset. And because the primary purpose is the person who is building the asset, he may not be able to manage it. So primarily, InvIT is getting that so that it will be able to manage revenue the generation. Revenue generation, it will do it, and then it will distribute it to the unit holders also. This is how it operates. So this particular mechanism, every participant may not be understanding that. You see, compliances, we can always read the regulations and we can understand the compliances. But basic fundamentals, my interaction with the professionals, several times it happens that they don't have the fundamental concepts of whether it is an InvIT or in a rate. So please, explain it in a more elementary level onwards, and then you go to this compliances. So straight away, if we say you have to hold the AGM and all within 120 days of the closure of the financial year, between two AGM, there should not be a 15 months. This is all the regulations. One can read and understand that. What we cannot understand is what I am asking you. Who is the sponsor? What he starts from, where the sponsor starts? What is the next step? He has to establish the trust. Then he has to choose the trustees, how that happens. Then the trust has to appoint that investment manager. What is the role of investment manager? He acquired the assets. And then the project manager, he manages the project. That's how it has to happen. Why we are going straight away to the compliances and other things, that I'm not able to understand that.
So we are looking at roles of each participant, in the structure. And So we started with unit holders, and we were looking to essentially cover everything that in terms of the role of a unit holder and requirements of a unit holder. But I guess Ms. Richa can, if she wants to add
So
anything.
I will add later on. I think you can run past through your presentation. I think with that, the role could be first defined by you, and then in case something missing, I'll add on it.
I think Richa, Sudhakar mean that, like mutual fund, we say that you can't invest everything in, you can't purchase shares of, TCS, but with some rupees also, you invest in mutual fund, you can invest. Same way, real estate, you can't purchase the asset entirely, but still you can benefit of that investment by investing in it. So little bit in it, what is the benefit and how it operates and
Okay.
why one will invest and why sponsorer will bring, property inside, what sponsorer will get, what unit holder benefit, that benefit of each, I think, in a
Deepti,
simple
I
language.
will give an example. I will give an example. Reliance Industries has built up the gas pipeline. Reliance Industries have the towers for the telecom project, right? They have invested some thousands of crores in these two assets. Ultimately, these assets have been given to the Brookfields, which is an InvIT. And Brookfield has taken over those assets and they started operating that and then went further. Here, my question is why Reliance sold it? And that sale also is for a fixed time period. After that, that assets will flow back to Reliance. So these kind of things, if we can explain by that, okay, there is a builder who built the asset. After that, he is not interested in managing that asset. That management will be done by an expert. And that expert, when he is managing the asset, he will generate the revenue. That revenue, whatever that his investment is there, he will take out that cost of the investment. And after that, whatever the surplus income is there, he will distribute that to the unit holder. That's how it operates. It happens. This is not there in the public domain to a large extent. The person who works on these InvITs or rates only can be able to understand and explain it further. That's what, in fact, I am looking at, Richa.
Sure. Sure.
Yeah.
So everybody understand that InvIT is a pass-through entity. It's an investment instrument that has enables the direct investment of money from retail investors or institutional investors or sponsors in the infrastructure project to earn returns on investments. So infrastructure has been defined by the notification of Ministry of Finance, which and that notification is October 2013, which has described infrastructure as transport, energy, water sanitation, communication, and commercial infrastructure. So, as rightly said by Sudhakar sir, that structure of InvIT is very important to understand by all of us because that's little different from the regular corporate entities that we deal with. So, at before InvIT, we need to InvIT structure, we need to understand what is the sponsor, how the sponsor is on the top of the InvIT. So sponsor is that entity or could be a private equity firm also who wants to set up this InvIT, who has this highway for example infrastructure project under it, but he does not have that expertise, but he does not have that manpower, or he does not want to be regulated by Indian regulator, so that for making monetizing this asset, he wants to monetize this underlying asset. What, in case it can be tower lines, it can be highways, it can be warehouse, anything. So sponsor is a key uh, stakeholder who can be a private equity firm also, or a financial institution also, who's looking at the monetization of their infrastructure asset. So their key role would be to set up an InvIT. They initiate a setup of InvIT, often transferring that assets into the InvIT structure. They oversight the management, but that's not their responsibility. They appoint investment manager to oversight that management of the asset. The InvIT has to ensure that the compliances are being done. There's some echo of the voice. Am I clear?
Yeah, you have to.
Okay.
You're clear. You're clear.
Okay. So sponsor has its own responsibility that they have to hold certain percentage, 15% of the InvITs up to 3 years. There's a waterfall for the sponsor lock-in, so that just as a promoter, like who launches the entity in their market, there should be some skin in the game for the promoters. Likewise, the sponsor has the responsibility to be there in the till the time of the InvIT life cycle. And there's a waterfall that for first 3 years, this much amount should be, this much percentage of the InvIT holding should be logged in and be protected, and then it goes down by each year. So sponsor now picks and chooses the trustee. This in case Kinjal, can you go on your slide number 5? Yeah. So sponsor will now appoint the trustee. The trustee will be acting as because the word says trust, InvIT trust. Trust will have its trustee who will have the who will hold the have the ownership of the underlying asset uh, for this InvIT, and the trustee will have the entire ownership of uh, overseeing the investment manager's activity also, seeking that the debenture, the trust deed which has been entered between sponsor, trustee, and IM has are been compliant and been regulatory seen. It ensures that the timely income distribution to the unit holders is being achieved. It sees that there's no conflict of interest. So broadly, trustee has a more responsibility in this whole structure because he oversees that entire interest of the unit holders are being complied with under the SEBI framework. Then unit holders are just like we have shareholders in a listed entity, we have unit holders or the investors in InvIT or REIT. They pool in the money. They indirectly they hold they hold the units of the InvIT, and they put in their money. Then we have investment manager as a very important stakeholder who manages the asset of the InvIT. This investment manager has a set of professionals who are who holds the expertise in managing this underlying asset. It ensures the regulatory compliance and the reporting to SEBI is ensured. Ensures the accurate valuation of the InvIT assets as is being done. Investment manager takes the decisions of the investments on behalf of the InvIT. They monitors the performance of the underlying asset. They do not do the day-to-day management of the asset, but they monitor and manage the performance of the underlying asset. They ensure the distribution income to the unit holders are as per the distribution policy and as per the SEBI regulations. They manages the risk associated with the investment of the InvITs.
I think this all is covered in subsequent slide actually, right?
Yeah. Yes.
Okay. I think we can now go through the slides. I think that will be.
I'll just quickly touch upon the purpose and the pros and cons of InvITs as an investment avenue. So InvITs as an instrument, it provides stable, predictable cash flows. They're built around operational infrastructure assets, roads, highways, etc. that already collect tolls, power lines that already transmit electricity, pipelines that already transport gas. They provide steady contract-backed revenues, which translate into regular distribution to unit holders. For many investors, they are a hybrid between debt and equity. It provides a stability of cash flows with the upside of asset growth. They also have high distribution yields. So, InvITs in India must distribute at least 90% of their net distributable cash flows to investors. As a result, yields are often higher than fixed deposit and many debt funds and other dividend stocks. They also provide predictable income. Retirees, HNIs, who want to build passive income, they look into going for InvITs, and that can be attractive for them. They also provide portfolio diversification. So InvITs behave differently from traditional equity and debt. Their returns are tied less to market sentiment and more to long-term contracted cash flows. This lowers the overall portfolio volatility and improves diversification. It's also professionally regulated structure. So SEBI regulates InvITs around valuation disclosures, leverage limits, governance, cash flow distribution. It provides transparency, oversight, and predictability. That if it were just an infrastructure project, it would not have. It also provides liquidity for publicly listed InvITs. So while this is still improving, InvITs listed on exchanges offer far more liquidity than direct infrastructure ownership, which could otherwise take months or years to exit for a company. It's a chance to participate in assets that were once accessible only to large institutions or governments. As we know, it also provides piece of the pie for the growth of infrastructure in India, which is expected to grow exponentially in the coming years. But there are a few setbacks when it comes to this particular instrument. It's sensitive to interest rate, in which behave a lot like long-term bonds. So when interest rates rise, yields on newer instruments rise too, and in which prices tend to fall. If the economy shifts into high interest rate environment, then your mark to market can dip. It also has underlying cash flow and underlying asset risk. So operational infrastructure isn't risk free. Cash flows can be disrupted in many ways. There could be maintenance shutdowns, natural disasters, legal disputes, counterparty defaults, lower than expected, traffic for tolls and all. And this risk may not always be fully predictable. Then also leverage risk, in which can use debt to acquire new assets. But while leverage boosts returns in good periods, excessive borrowing can become risky, especially if cash flows weaken or refinancing condition is bleak. Also, there is limited capital appreciation for an instrument like this. They are not built to generate capital gains and aggressive growth. They are more for regular cash flow income, and the upside is mostly modest compared to equity. Also, they are dependent on regulation and policy of the government, and since they rely on government contracts, tariffs, concessions, changes in policy and regulation can materially influence the cash flow that the InvIT cash flow and return that the InvIT provides. So, for example, any kind of revision in toll norms, changes in renewable energy tariff, regulatory changes on transmission charges, and all kind of can impact how the cash flows how much cash flows are collected and what returns the InvIT is able to provide to its unit holders. And it's also relatively complex instrument compared to equity and all in the market when it comes to taxation norms and all for retail investors. They still don't have clarity over how they can go about investing in such a unit, and also the liquidity in the InvITs market is not low. They don't trade with large daily volumes, and exiting big position might require a bit more time compared to equity. Coming to the role of a sponsor, so as we mentioned earlier, sponsor is one of the most important participants in the REIT structure. A sponsor is the founder and promoter of InvIT. A sponsor essentially sets up the InvIT. They identify initial portfolio of infrastructure projects and initiate the process of transferring and registering of the InvIT. They are also required to have skin in the game to ensure that there's credibility and alignment with the unit holders and investors. They are also the ones who transfer their assets to InvIT. So sponsor play a key role in forming the initial portfolio of the InvIT. They transfer the ownership of a lot of infrastructure projects such as roads, power transmission lines, renewable energy, etc., directly or through SPV. And they are usually revenue generating and operational assets. They ensure that the InvIT starts with some stable cash flow initially. They also appoint key parties in the structure. They appoint the trustee, investment manager, project manager, and they initially, while setting up, they ensure regulatory compliance and listing of the InvIT units, ensure filings with SEBI, proper disclosure in offer document, etc. They also are responsible to drive growth of the InvIT. So they essentially provide a pipeline of future assets for the InvIT. They essentially since the initiation of the InvIT, they ensure that there is a good supply of and good assets with the InvIT from the start itself. They also ensure that the InvIT has long-term visibility of growth, and they also support fundraising through preferential issues, QIPs, and acquisitions. They also provide strategic guidance. So essentially, they don't run the daily operations, but they influence the long-term strategy. They participate in decision making through board representation. They also bring deep sector expertise to help improve the asset performance. So there are SEBI mandates certain requirements from a sponsor. So sponsor is the person who I mentioned earlier, who sets up who applies for registration of the trust on behalf of the trust in uh, any kind of breach. Then there's a recourse available for the sponsor. Then they also have the asset transfer obligation. They shall undertake to um, transfer its entire shareholding or interest and rights in the holdco and SPVs ownership of infrastructure projects. And this is done prior to the allotment of units of the InvIT. And yeah, then looking at they are required to have skin in the game, so that to ensure that their interests are aligned with the unit holders, they need to have a minimum shareholding of 15%, at least in the initial 3 years, with a lock-in of 3 years, as mentioned, and their any holding by the sponsor in the InvITs exceeding 15% must be held for a period of not less than 1 year. They are also required to appoint the project manager, who shall be the sponsor, associate of the sponsor, and with a tenure of 3 years, unless the sponsor holds more than 25%. stake in the InvIT. Moving on to the role of the trustee. So the trustee is again has a lot of responsibility in the InvIT structure. It holds the InvIT assets in trust for the unit holders. It's the legal owner. And it also protects the interest of the unit holders, which is the primary mandate of the trustee. They act independently of sponsor and manager to ensure that the interests of the unit holders are protected. They also monitor the investments. They ensure that related party transactions are conducted in a regulated manner. They also ensure compliance and governance in the InvIT structure. Uh, they are responsible to track and ensure compliance with several regulations, such as SEBI regulations, trust deed, investment restrictions, borrowing limits, distribution rules, disclosure requirements, valuations requirements, NAV calculations, accounts and audit, etc. They oversee managers, operations, investment manager, and project manager. See that they're operating in an efficient manner if and they're performing their duties. Their business decisions align with the trust deed and objective of the InvIT. And if they are not following this, then they can replace the manager, appoint another manager. They also approve key decision and transactions in terms of acquisition of assets, borrowings beyond prescribed limits, changes to the trust, to the structure, distribution of cash flows, etc., related party transactions, etc. So nothing material can proceed without the approval of the trustee.
So
Um,
basically, there's a in principle, or we say a prior consultation with trustee. So though trustee will not have any say in the business deals or transactions, but as a overviewing authority, he will just have that fairness on the transaction. And there are certain transactions where SEBI has asked that prior consultation of trustee has to be sought before taking it by the before the board and before taking a concrete decisions for any acquisitions, for any majority of the directors being appointed on the SPP board, etc. So trustee is taking care of overall fairness of the governance.
Yeah, they also ensure that the proper flow of funds in terms of net distributable cash flows are actually reaching the unit holders on a regular basis. It also engages independent professionals such as valuers, auditors, and other independent professionals as and when required. They also maintain custody of records, so your proper documentation is maintained, records of units, transfers, and ownership, and all contracts related to InvITs are kind of maintained securely.
So practically in India, most of the InvITs are having their trustee as access trustee or IDBI trusteeship services. So broadly, these are the two main trustees for InvIT structure in India.
Yeah, so they have the fiduciary and custodial duties. It shall hold assets in the name of InvIT for the benefit of unit holders, and it will ensure that the subscription amount is kept separate in a separate bank account in the name of InvIT, and utilized only against assets and requirements as per the offer document. It also uh, is required to perform the function for oversight and compliance, monitoring, oversight of investment manager, oversight of project manager, ensure that they are performing their duties properly, reporting and disclosure requirement on a regular basis, and any kind of regulatory reporting that is done. It must be vetted by the trustee that goes out. Then unit holder governance, um, to ensure that all the governance requirements for the unit holder, for the protection of the interest of the unit holders, is taken into account. For example, related party transactions, etc. In case of any kind of changes in management, then they they are the ones who manage this transition. They appoint the new manager, etc. They also ensure that there is financial reporting and conflict management is done on regular basis and on an immediate basis. Moving on to the investment manager role. So the investment manager is essentially the brain, the strategist, the operational engine of the InvIT. While the trustee is, the guardian, and the sponsor is more of the creator of the trust. The investment manager runs the InvIT on day-to-day basis, and it ensures that its assets perform well and grow. They also see invest. So the investment manager essentially manages InvIT's assets and operations. So investment manager is responsible for the entire management and operations um, uh, of the assets. So this includes looking into the SPV and project companies, ensuring asset meets performance standards, monitoring cash flows, revenue performance, and implementing strategies to improve efficiencies and returns. They also make investment and divestment decisions. They evaluate new assets for acquisition. They conduct the due diligence required. They recommend acquisitions to the trust. They identify assets for sale. They also ensure compliance with SEBI investment conditions. They also want to maximize the value for unit holders. Um, then the investment managers play a central role in ensuring financial discipline. They, including preparing annual and half-yearly financial statements, monitoring cash flows, distribution calculations, ensuring timely distribution, preparing performance reports, etc. Then they also play the compliance and governance role. They have to ensure that the InvIT is complying with the SEBI regulations, LODR regulation, trust deed, valuation norms, distribution requirements, leverage requirements, etc. It also coordinates with different key parties, your trustee, sponsor, project manager, lenders, valuers, etc. It also oversees valuation of assets. So, for InvIT, valuation is required on set uh, timelines, and it must be ensured that it's done in time. And he appoints the valuer, ensures that the reports are delivered in time, um, and provides necessary information as and when required. They also manage borrowing and capital raising.
That
So
means
the investment.
that means more or less the investment manager is performing like that of the board of directors, taking all the responsibility. Is that correct?
Yeah, right.
Yeah. Then the investment manager is responsible for structuring and managing debt issues, bank loans, refinancing, equity raising. It ensures compliance with leverage cap that is provided for InvITs. It also does a bit of day-to-day administration. He handles appointments of auditors, valuers, project managers, drafting, filing offer documents, operational coordination with SPVs, monitoring contractual obligation, and ensuring insurance coverage and all for all the assets that are there. It also formulates investment strategy, the growth strategy, risk management, capital allocation, ESG policies, long-term yield strategy, etc. Now, SEBI requires investment manager to have certain basic requirements. So, if the manager is a body corporate, then it must have a net worth of not less than 10 crores. If it's an LLP, then net tangible value must be not less than 10 crores. Experience must be at least 5 years in fund management advisory services, property management, and the manager must have not less than two key personnel with not less than 5 years of experience, and at least one should have at least 5 years of experience. It also the board for such investment manager, half of its directors must be independent. In case of LLP, members of the at least half of the members of the governing board must be independent. Then it must enter into investment management agreement, and with the trustee, which kind of details the manager's responsibility. as per SEBI regulations. Also, the investment manager must not be associated with other InvITs. It must have an office in India, and it must have an investment management agreement. It must be a fit and proper person, without any disciplinary and history and regulatory actions that has been taken against the investment manager. Moving on to the project manager. Now, investment manager is more of handling of investment of assets of the InvIT, whereas project manager actually looks into each project asset that the InvIT owns. When he plays a critical role, critical operational role in the InvIT. So while sponsor, trustee, and investment manager provide strategic oversight and governance, project manager is actually responsible for the day-to-day execution of the activities that keep the infrastructure assets functioning smoothly and profitably. So the project manager oversees the actual operations and maintenance of the assets. So they ensure continuous availability of and performance of assets, managing maintenance schedules, implementing safety and quality standards, efficiency, reliability. So they essentially kind of want to ensure that they keep generating stable, predictable cash flows. They are also they are implementing InvIT's business plan. So they execute. So whatever targets that is provided at the InvIT level, the project manager is responsible to ensure that he's the one who's actually executing the plan on ground, with its operational targets, performance benchmark, efficiency improvements, capital expenditure requirements. Also, it looks into compliance and regulatory support. So, while investment manager, trustee, and all are formally responsible for regulatory compliance, such as SEBI regulations and all, the project manager actually supports this function by providing operational data for disclosures, assisting with sector specific compliance, which is environmental safety, municipal infrastructure standards, etc., and ensuring that the license, permits, approvals of assets are valid. And so this is essential for risk mitigation when it comes to each asset. They also look into contracts and vendor management. They get into vendor selection and onboarding, performance monitoring, and ensuring that the contract terms are followed. And in case of any disputes and all, then this is resolved amicably. So they are essentially a point of coordination on ground between several activities of the projects. They also look into performance monitoring and reporting. They look into operating KPIs, downtime and efficiency reports, asset condition and life cycle assessment. And this kind of feeds into the financial modeling, valuation reports, and investor disclosures that eventually go out. They also ensure cash flow stability. They want to ensure that there is minimum operational distributions. They want to optimize maintenance schedules, and asset efficiency and control. They want to control operating costs essentially. They also they are the execution of expansion of gradation of projects. So if the InvIT plans to expand the capacity, upgrade the assets, then within the existing portfolio, then the project manager executes these activities, including any additional contracts, managing timelines and budgets, ensuring quality of the construction, coordinating with government and utility authorities. So with this kind of base and stability, then the InvIT can grow on the assets that they already have. So essentially, the project manager is the operational backbone of the InvIT. And it makes sure that the roads get maintained, towers are stay connected, and the pipelines keep flowing for the InvIT.
There is a question has actually come. Who can be the investment manager, whether it is the banks or NPSC or companies or professional?
So investment manager has to be a company which has to be professionally run, because as you just saying that they work like a board of directors, or they do the investment making decisions. They oversee uh, the operations of the of project manager. They coordinate with with their trustee. They do the day-to-day regulatory compliances. So it has to be, they are the set of professionals who are doing that as an IM.
Okay.
Yeah.
Go ahead, Kinjal.
Right. So project manager is essentially an LLP or body corporate that is appointed for execution and management of the project. In terms of public-private partnership, they ensure that they achieve the project milestones in terms of the concession agreement that is entered between the parties. Then they are project managers of the InvIT shall be sponsor and associate of sponsor with minimum 3 years of tenure, um, and there's a waiver for that, that if uh, the sponsor holds more than 25% of the units, then this kind of association is not really required. They must be fit and proper person, without any disciplinary history or regulatory action against them. Coming to the role of the special purpose vehicle, they actually they are the entities that own the assets, and they hold roads, transmission lines, pipelines, and all the operational revenues are owned in these entities. They are the ones that require regulatory approval, licenses, contracts, etc. They ring fence cash flow. So essentially, which means that they ensure that the cash flows from each projects are clearly identifiable. They are separate from sponsor and company level finances, and they are available to InvIT for distribution. They also upstream cash to InvIT. They ensure that all the distributable cash flows that are collected from the asset are passed on to the InvIT, which is then later passed on to the unit holders in terms of dividends, interest, etc. They do they are responsible for the execution and operations. So the day-to-day operations of the projects are managed at the SPV level. Um, then they look into debt and financing. So SPV is the actual entity that holds the debt in respect to the particular project. They raise project level loans. They refinance existing borrowings at SPV level, and uh, it kind of helps ensure that at InvIT level the leverage limits are maintained. Then also they ensure regulatory and contract compliance when it comes to sector specific laws, environmental standards, construction permits, etc. They also look into asset management and enhancement. So they undertake repairs, capacity upgrades, life cycle maintenance, etc. They also they're looking into contracting with key stakeholders, meaning toll management contracts, purchase power agreements, transmission service agreements, lease agreements, etc. So this is the entity that looks into all of this. This is not looked into at InvIT level.
Correct.
Um,
Correct. So it is
then
like
it,
a subsidiary under a holdco. So like each infrastructure project is held by each different SPV, which has own governance board, own policies, etc., under the umbrella of the IM, but uh, have its own independent board governance side, own authorized signatories, etc. And trusts hold a direct investment in these SPVs.
right. Then the potential asset injection path, which essentially means that developers or sponsors first create the project inside an SPV, and once the project stabilizes, it is dropped down or sold or transferred to the InvIT under the SPV model to ensure that it's scalable in the long term. Moving on to other parties. So you have the valuer, which again is an important party in this structure. It must be independent and have professional conduct, objectivity, required qualifications. It ensures that it must have proper internal controls to ensure that there's objectivity, quality standards. It must have financial resources and adequate facility to ensure that it's able to provide quality services to the InvIT. It must not take the assignment if there's any conflict of interest. It must not trade in the units of the assets of the InvIT prior to being appointed up to 6 months after cessation. And the trustee is required to ensure that the remuneration is not linked to the value of assets that are being valued. In case of any conflict of interest, there must be a disclosure that if in case of related party transactions, that there must be a disclosure. And they must ensure that the reports that are provided must not have any misleading claims and exaggerated claims. Auditors
There,
also
there is
another.
a there is there is a question has come actually. Somebody is putting here, Madam, keeping view of the wide range of the intricacies and compliances of the vast business scope, can a LLB, Association of the Professional with the diverse qualifications and experience, offer their LLB services as a trustee to the investment trust?
So a trustee has to be registered with SEBI under SEBI Debenture Trustees Regulation 1993 and should not be an associate or for the sponsor IM. So you have to see with that and whether this LLP falls into that regulations.
Because the initial slide said actually the trust should be registered under the Trust Act actually, but the LLB is actually registered under the Companies Act. So probably, I don't know.
So they're asking for the trustee if LLP
Yeah.
can be a trustee.
Yeah.
So trustee
Because
has to
trustee to
fulfill
an
the
investment
condition.
trust. Yeah, that is what they are asking. Whether the LLP can be a trustee to an investment trust.
So trustee has to be registered with SEBI under the prescribed guidelines with the eligibility criteria provided therein. So that particular LP now has to fit in there in under those compliance framework.
Somebody has put another question. Can I know how about the ring-fenced cash flow?
So what Kinjal was trying to bring in was that each SPV has its own uh, balance sheet, financials, ring-fenced cash flow. So I think that's the reference to that slide.
Okay. Yeah, go ahead, Kinjal.
Right. So auditor is another secondary party to the structure. It conducts the audit, provides true and fair view, limited review in case of entities. They have access to records. They can demand information and explanation whenever required. There has to be an auditor rotation. So it's investment managers' responsibility to ensure that rotation of auditors takes place. In case of conflict of interest, it is investment managers and project managers need to obtain confirmations. Then investment manager must ensure that the audit is done at least once a year and submitted to stock exchange within 60 days. And NAV declaration is based on valuer's report, which is again must be disclosed to exchanges within 15 days of the date of action.
Yes, so
Now,
quarterly
as
financials have to be submitted within 45 days of the end of the quarter, and the annual one is for 60 days. Absolutely right.
okay. Now I'll just quickly run through the issue and allotment of the units that happens. So once so InvITs are either privately listed or publicly listed. So in case of publicly listed, then the InvIT shall make an initial offer of units by way public issue private placement, and the value must not be less than 500 crores. The offer size should not be less than 250 crores, and minimum number of units unit holders other than sponsors and its related parties should not be less than 20 for a public component of publicly offered InvITs. Then minimum subscription amount is 10,000 to 15,000. Maximum is it must be less than 25% of total unit capital. Minimum issue subscription required is 90%. And if there is oversubscription, then the InvIT can retain 25% of such oversubscription. If in terms of public float requirement, if the post issue capital is less than 1600 crores, then at least 25% of the post issue capital should be public float. For 1600 to 4000 crore, then it must be at least 400 crore, and for anything post issue capital of anything above 4000 crore, then at least 10% should be public float requirement. In case of any kind of market movement, etc., this kind of is, not maintained. Then the InvIT has 3 years to come in compliance with this. Then the offer, the listing process is relatively similar to equity, where InvIT through merchant banker must file offer document with the stock exchanges, and SEBI is in sorry, with the designated stock exchanges and SEBI in not less than 30 working days before filing of offer document. The draft must be made public for comments for period now not less than 21 days, and should be disclosed on website, exchanges, merchant bankers, by the merchant bankers. SEBI will communicate if any comments they have on this offer document. And a due diligence certificate is issued by the lead merchant banker. The offer window for this particular issue, so initial or follow-on offer for rights issue must be made within not more than 1 year from the date of board's SEBI's observations. And a fresh draft of a document must be filed unless it's a fast track right issue. In case of subscription, minimum subscription is 10,000 to 15,000. And the offer cannot be open for more than 30 days. Units are only issued in demat form, and if the InvIT fails to collect subscription for at least 90% of the fresh issue, then the money must be refunded to all applicants. And this refund, InvIT must allot units or refund application within 12 working days. And if this is not done, if the refund is not done in time, there's a 15% interest penalty. After initial offer, it is mandatory for all units of InvIT to be listed on recognized stock exchange. Public offer must the listing of public offer must happen within 12 working days with date of closure of offer, and for private listing, it's 30 working days from the date of allotment. In case of listing failure, then the InvIT is liable to refund subscription money. And in case it's not able to, then there's an interest applicable for 15%. If the InvIT fails to make any offer, then within 3 years from the date of registration, then it must surrender its certificate of registration. Moving on to the trading of these units. So the trading lot for publicly offered units is 1 unit, and for private, it's 25 lakhs. And unit holder, at least there must be 20 unit holders for the public component of publicly offered units. And if for sponsor units, it's there's a lock-in period of any person other than sponsor must hold these units for a period of not less than 1 year from the date of listing.
And
Similar
also, just like
guidelines.
equity, in the equity ICDR guidelines, if you're going for OFS, then the similar guidelines are applicable that 1 year should be held. So, slight twist here. ICDR says till the time of red herring prospectus. But InvIT guidelines said in the case of OFS, the selling unit holder should have held those units 1 year prior to the draft offer of document and should be free from any encumbrance, lien, lock-in, etc. So there are multiple places practically where InvIT regulations are not very clear because they are still evolving. So many inference has been taken from ICDR regulations, which we draw parallel, take it with SEBI, and SEBI was always welcoming to provide those clarifications or make proper adjustments in the regulations.
Right. Even when it comes to offer document and advertisement requirements, it's on the same track. It should all contain true, correct, adequate disclosures. Not and nothing should be misleading. No misstatements. And they should contain all risk factors and um, provide material true information essentially. For private listing requirement, then the private placement must be done through a private placement memorandum. Funds must be raised only from institutional investors and body corporate. It can be Indian or foreign. The minimum investment requirement from any investors is 1 crore. Then and the number of investors must not be less than 5 and not more than 1,000 investors. And filing must be done at least 5 days prior to the opening of issue, and whereas final filing within 10 working days from the date of listing. Now, there are certain conditions and requirements when it comes to these InvITs. So, investment by an InvIT shall be only in holding companies, SPVs, and infrastructure projects, or securities in India, which I will delve into in the subsequent slides. And it must be the investment strategy must be provided in the offer document. And in case of public-private partnership projects, in which are mandatorily invest in infrastructure projects through holding company or SPV and not directly own the assets. If it's investing through an SPV, the investment manager, in consultation with trustees, shall appoint majority of the board of directors or governing board of such SPVs. The manager must also ensure that the InvIT's voting rights are exercised in every meeting of the SPV. In both SPV and holding company structures, agreements must be in place to ensure no other shareholder or partner exercises rights that prevent the InvIT holding company or SPV from complying with these regulations. And agreements must also ensure and provide an appropriate mechanism for dispute resolution. And in case of any inconsistency, of course, these regulations will prevail. In case of investing through a holdco, then the ultimate holding interest of the InvIT in the underlying SPV must not be less than 26%. Then there are certain requirements in terms of portfolio composition of the assets of these InvITs. So they must be more than 80% of the value of InvITs for publicly and privately listed InvITs should be in revenue, completed and revenue generating assets. And under construction projects must be less than or equal to 10%. And any other non-core assets must be less than 20% or less than or equal to 20% of all InvIT assets for publicly offered InvITs. Now, any unlisted debt of companies in the infrastructure sector, excluding its own debt, it can invest in. It can also invest in equity shares of listed infrastructure companies that derive more than 80% of its operating income from infrastructure, and government securities and any other money market instruments and cash equivalents, essentially. For privately placed InvITs, apart from the 80% requirements in completed and revenue generating projects, The other uninvested funds may be invested in specified securities, in certain securities essentially, and it must be and for investment in any under construction projects, the this is included in the 80% limit, and they have there are certain requirements for eligible infrastructure projects in this case that is required for privately placed units. And the same kind of non-core other assets, same instruments applicable for the privately placed, privately listed InvITs. In case of breach, the InvIT must ensure that the compliance is undertaken within 6 months, and any kind of asset holding. So the asset holding period, so assets should be held by the InvIT for not less than 3 years, directly or indirectly, and this does not apply to investment in securities of any non-SPV infrastructure companies. So, as per the requirement, at least 90% of the of the cash flows collected by of the SPV shall be distributed to unit holders. In case of holding company, um, uh, any additional income that the holding company um, by any chance generates, then 90% of that cash flow should flow, at least 90% of that cash flow should flow to the InvIT. And apart from that, the actual cash flows from assets and SPVs, 100% of those cash flows should flow to the InvIT. And InvIT shall distribute not less than 90% of the cash flows collected from the assets towards unit holders. And InvITs are not allowed to lend to any other parties. They cannot play a lender
That's the most
in.
lucrative thing, that 90% of the net cash flow has to be distributed, has to go away in the hands of the unit holders, which ensures that there's steady income in the hands of unit holders.
Yeah. Then, so for publicly offered units, cash flows must be distributed once every 6 months at least, and for privately placed units, every year this must be distributed, and this distribution is made within 15 days of declaration. In case this is not done, then there's a penalty of interest of 15% per annum that must be paid. And in case the InvIT sells an asset and it is not able to, it doesn't invest the proceeds of the sale of such assets into another asset within 1 year, then at least 90% of the sale proceeds must be passed on to the InvIT holders. In case of related party transactions, they must all be on arm's length basis, and in the best interest of unit holders. And it must be mandatorily disclosed in the offer document and placement memorandum. For there are required ongoing and periodic disclosures to stock exchanges and unit holders. Any fees or commissions paid to related parties must be disclosed. In case of material related party transactions, asset acquisition or sale with related parties, or sales or investments with related parties, more than 5% on InvIT in a financial year, or borrowings from related parties, which is more than 5% of consolidated borrowing of InvITs, unit holder approval is required before entering into such related party transactions. In case of inter-InvIT related party transactions, that is, with a common sponsor, common investment manager, or any associates of the sponsor, then these are treated as related party transactions for both all InvITs involved, and the same related party transaction rules apply. In case of a related party transaction, If in case a related party has a business that competes directly or indirectly with the InvIT, so they must disclose the details of this competing business, and they must declare that they will be performing their duties towards the InvIT independently. And if the InvIT intends to acquire the competing business, then this must also be disclosed.
I am
There are
overseeing
certain
the related party transactions of PM. Every quarter, the post facto, all the related parties being held through PM is also being overseen by the board of IM to ensure there's a uh, rigorous oversee on the related party transactions by the IM also and its board.
Okay. There are certain restrictions on borrowings that are placed on these InvITs. So the InvITs can, have an aggregated consolidated borrowings um, at the entire InvIT level. So that at the top of the structure on consolidated basis, not exceeding 75% of the value of InvIT assets. And there is, if the aggregated consolidated borrowings exceed 25% of the value of InvIT assets, then for any further borrowing, so up to 49% of the InvIT assets, a credit rating must be obtained. And if this borrowing exceeds 49% of the InvIT assets, then it must obtain a triple A credit rating for its consolidated borrowing, and it must utilize the funds only for acquisition or development of infrastructure projects, and they must have a track record of at least six distributions previously, and there is a 75% unit holder approval that is required once this 49% borrowing threshold is breached.
Absolutely. So this is the
In
additional safeguard that SEBI has put in. Unlike REIT, which there's no 49 or 70% threshold is there. So this is the additional safeguard for the unit holders that InvITs are being only allowed for till 49% and all this stringent compliance before they could increase the borrowing further. And this distribution has it should be a continuous distribution, one in each quarter. It is not that just to fulfill the six distributions criteria and I go and in a quarter I do three, so that will not be allowed. So that shows that authentic compliance track record for distribution in each quarter is being maintained.
in case of any kind of breach of these limits, then due to any kind of market movements in asset prices and all, the investment manager must inform the trustee and rectify the breach within 6 months. Then the InvIT may issue debt securities, which must also be listed on recognized stock exchange. There are certain valuation requirements for the underlying assets. So a valuer is appointed who must be independent and not and must have a minimum experience of 5 years. Cannot value the same property for more than 4 consecutive years, and there must not be any conflict of interest. There are different types of valuation on annual basis, half yearly basis, before any units are issued. And in case of any material changes, then a valuation must be required. A manager must submit valuation reports to the designated stock exchanges and unit holders within 50 days of receiving such reports.
So valuation being a little critical in the InvIT space because that's how the unit holders perceive the value in the InvIT and then they decide whether to invest or not, which brings the confidence of the institutional and non-institutional investors. So SEBI every year takes up the thematic inspection or the thematic route so that on every theme they can teach InvITs, REITs how they have to proceed. So last year, one of the thematic inspection that SEBI took was on valuation. They invited all the valuers across InvITs who have been doing that. and they have now guided the valuers how and what important things they need to mention in the valuation report, so that an informed decision could be taken by the investors. So some of being like their details, who are the registered valuer, what are the partner details, what is their experience on that, what are the assumptions that you are taking, what are the operating expenses that you are considering, what are the related party transactions that you've been considered. So all these things have been streamlined and structured so that valuer can also uh, provide their report, so that the investor can have their informed decision.
Now, certain governance requirements. So the manager essentially handles
There
conduct.
is a suggestion by Mr. Sivkumar for valuer 4 consecutive years is on higher side. I think it should restrict it to 2 years and change the valuer.
For secretarial auditors, how many years do we have? For statutory auditors, how many years do we have? So,
It is up to the wisdom of the
and also
regulator who has actually put
when
it.
you hire a professional firm, and that's not any, and when you hire a registered valuer firm, they take all time to absorb the business and make the deliver the reports, etc. So I think 4 consecutive years fair.
Okay, go
So
ahead. Go
the
ahead, Kicha. Yeah.
Yeah, the manager essentially looks into holding of meetings with the trustee oversight. And in case of any conflict of interest on matters that are being decided, then they must step out and ensure that they are not present in the meeting. And also, the meeting must be held at least once a year within 21 days of the financial year end, and the gap between 15 days must not be more than 15 months. Um, Now, there are certain disclosure requirements. The manager must ensure that the disclosures in the offer document are complying with SEBI regulations. In terms of annual report, the manager must submit annual report to all unit holders within 3 months from the end of the financial year. And the disclosures required in this annual report is mentioned in the SEBI regulations. Since this is just an overview of the topic and just an insight, we won't be getting into this right now. And given the paucity of time, then there are half-yearly reports that are submitted to all unit holders within 45 days of half-year end. And the requirements are specified again in the SEBI regulations. Um, in case the InvIT has a consolidated borrowing of more than 49% of asset value, then it also has to submit a quarterly report to the stock exchange within 30 days of every quarter ending. Um, and so these are additional reports that go in June and December over and above the half yearly and annual reports. And the requirements are specified in SEBI regulations.
Absolutely right,
The
Kinshuk.
valuation.
And as per the recent change in the SEBI regulations, only this half-yearly report is for the public InvITs now. Earlier, privately listed InvITs who had their borrowing above 49% had to go for this half-yearly report.
Right. Um, so half yearly valuation must be conducted for publicly offered InvIT, and now after the amendment privately listed InvIT also. There must be NAV disclosed to stock exchanges not later than 15 days from the date of valuation. In case of event-based disclosures for any material development affecting valuation, there must be a full valuation that takes place once this material event takes place, and the valuation within 2 months, and the disclosure of such valuation report must be made within 15 days to the stock exchanges. Any kind of price sensitive information disclosures, any kind of additional borrowings, any credit rating changes, any breach of limits, non-compliance, any kind of legal proceedings, then these must also be disclosed to the stock exchanges on a immediate basis. Then, when it comes to LODR regulations, not all LODR regulations apply. Only only certain ones when it comes to debt listing the InvITs that only apply, but InvITs themselves have separate LODR requirements. So separate requirements apart from LODR essentially. So they must have a board composition of minimum 6 directors with at least one woman independent director, a quorum requirement of 1/3 or 3 directors, whichever is higher. Video conferencing is not allowed, and they must have a quarterly compliance review that the board must undertake to ensure that all applicable laws are complied with and rectifications required are undertaken. There's certain mandatory minimum information to be provided to board, which includes capital budgets, operating plans, financial results, minutes of other committees, um, any kind of show cause notice, defaults, legal judgments, etc. Um, the compliance there's a compliance certificate also that is issued, that is certified by CEO CFO, where they say that the financials are true and fair, no fraudulent or illegal transactions have occurred, and internal financial controls have been in place. Any kind of significant changes in policies and controls that have taken place. There's also vigil mechanism requirement, which is similar in line with the LODR requirement. There's also a secretarial compliance report requirement that is issued by a practicing company secretary, which is filed with stock exchange within 60 days of financial year end, and is attached to the InvIT annual report. There's also a quarterly compliance report on governance that is issued and which is signed by CEO and compliance officer, and which must be filed with stock exchanges.
Absolutely
Now,
right, Kunjal. As per Regulation 26G, Chapter 6B, Regulation 17, 18, 19, 20, 21, 26, and few portion of 25 is applicable on all InvITs. And in case any InvIT has high value debt, then Regulation 15 to 27 will also be applicable.
Now we'll just quickly run through the recent amendments in the InvIT sector that has happened. So the definition. There was a change in the subordinate unit framework. Before there was no formal regulatory framework for subordinate units. Sponsors and InvITs needed a way to bridge valuation gaps when an InvIT acquires infrastructure assets from its sponsor or related parties. Subordinate units provide a structural tool to allow such sponsors to be able to do so. So this was introduced recently, and so this subordinate units can now be issued only to sponsor, and they do not carry voting rights and distribution rights, and they can be reclassified into ordinary units later, and they are excluded from minimum sponsor unit holding they are excluded from minimum sponsor unit holding calculations, and the terms of these sponsor units must be clearly disclosed, and at most 10% of acquisition price or 10% of ordinary units outstanding is should be the value of such subordinate units when in at which they are bought or sold. Before, there was a minimum allotment requirement of 1 crore, but now it's reduced to 25 lakhs for properly placed InvITs. When it comes to related party transactions, it explicitly excludes definition of explicitly excludes the definition of public, which essentially means that public for InvIT was broadly defined as any person other than related parties. So SEBI's rules excluded related parties from public, but now to clarify who exactly is not considered as a public unit holder, in order to exclude key insiders such as sponsor group, investment manager, project manager from public category. So related parties like the sponsor and investment manager explicitly excluded from public in offers. But if a related party qualifies as qualified institutional buyer, they can count as public in an offer. And this essentially kind of clarified the definition of public when it came to um, offers that were made for raising of funds via issue of units, and public holding requirements for that. Then there were so before there was a limit on what all they could what all instruments they could invest in, but then that has now been expanded to include more instruments and hedging tools for these InvITs. There was also a sponsor lock-in requirement of 15% post IPO, but after 2023 amendment, there's a perpetual sponsor unit holding. The older lock-in rules became restrictive, redundant. So market participants pushed SEBI to ease these enhance operability. And SEBI has proposed to remove this lock-in on sponsor units over and above the minimum during conversion from private to public InvIT. This may make it easier for sponsors to manage their capital while complying with ongoing minimum unit holding obligations. And then when it comes to reporting and disclosure alignment, so before valuation, fund flow, and performance reports had less tightly defined timelines and were not explicitly aligned together according to financial reporting cycles. So to improve transparency, valuation to ensure valuation data is timely and better monitored and all, this was aligned in order to ensure that unit holders and regulators have better track of asset values, and they can better track their financial risks essentially. So with that, we come to an end of our InvIT presentation, where we kind of just went through and brisked through the entire InvIT structure in India and how that is faring and the regulations surrounding that. And due to paucity of time, we couldn't get into too much detail on all of that. Hopefully, going forward in other subsequent webinars, we can get into that.
Thank you, Kinjal. Richa, would you like to have some closing words as regards InvIT and thing?
Thank you, Kinjal, for bringing justice within 2 hours that you have given a broad spectrum to everybody. For all professionals sitting here, I'll say that please use this platform, create awareness. This has a lot of scopes for practicing company secretaries in profession, for registered valuer, for chartered accountant, etc. And this space is still has lot of options for the people who are still there, but has a welcoming door for all other professionals. And I'll say that start evaluating, start thinking about other products, as we have I coming from a background where I've in my whole career I've undertaken from the listed, unlisted side, have taken have taken part in the corporate transaction sector. But I find this new world of REITs and InvITs to be very exciting. The regulator is very promising. The market is very promising on that. They see that how mutual fund has gained the trajectory in last 20-30 years. The same we'll witness in India also. So I want everybody to be part of this as a professionals. Thank you.
Thank you. Thanks. With this, Sudhakar, you want to say something?
I echo whatever Richa has said, that these are unknown territories, and though we always are hesitant to trade into the unknown territories, but only who can venture into that, they will get benefited ultimately. So, for example, Richa has ventured into this and she immensely got benefited. And she is advocating the same thing to others also. So, my advice to the participants also be that to give some kind of a thought, and then spend some time towards this InvITs and rates also, so that you will get benefited. If everybody is craving only for Companies Act and listing regulations related, then too much of competition will be there. There is no niche area you are developing for yourself. And even in our own form also, we should be able to take up something with related the areas. Fortunately, Kinjal is there who got a good amount of subject knowledge about this. So let us also venture out this. Thank you.
Thank you. Thanks, everyone. With this, I think it's 1 o'clock. Sharply, we close at the right time. Thanks, Richa, for your knowledge sharing, experience sharing, and we'll look upon you that you guide more CS professional in this area. Thanks a lot for your experience
Thank you.
sharing.
Thank you for having me today.
Thanks.
Thank-
Thanks, everyone. Thanks a
Thanks.
lot.
Thanks a lot, Richa. Thanks a lot to Kinjal to put everything in a precise form and also in a good flow, putting the things, especially the new area which you have actually brought in. As Sudhakar puts it, the infrastructure is definitely going to be strengthened. It is going to be one of the more areas which is going to get a niche areas in the future. Like a mutual fund, it will get a greater things. I think professionals should make use of it. That's what. Explore the new avenues, expand yourself. That's what I would say. Thank you.
Thank you, Mr. Bala.
Just,
Thanks,
before
everyone.
we
Thank you.
just 1 minute,
Yeah,
Dipti,
yeah.
before we conclude, I would like to make an announcement that from next week onwards, we are starting the masterclass on constitution of committees and other related things under listing regulations. So kindly to join, and as we know that there are 5 statutory committees which we have to constitute. All these committees have enormous responsibilities on them, which we will be discussing in the next forthcoming 5 series of webinars. So kindly do join that thing. Thank you.
Thank you. Thank you, everyone. Thank you, Richa. Thanks. Thanks.
Devti, somebody has already put it. Mehta and Mehta doing a very excellent service to the corporate community. Thanks for that. If possible, arrange the sessions of the working independent directors. That is a suggestion which is actually coming to analysts to know more about the responsibility and the current status. That's what they have put it actually. People are really appreciating. It's good. Thank you.
Thank
Thanks a
you.
lot.
Thank you. Thanks a lot. Thank you.